Welcome to BizTech's Asian Midday Market Watch. It's Tuesday, the 22nd of November, and we have Jessica Amir, market strategist at moomoo, as our guest today, coming to us out of Sydney. Jess, it's always great to have you on the show.
Hello, great to see you, Brian.
Now, Jess, today we're going to take a sharp look at some key stocks that you like and perhaps also some potential recommendations for stocks we should be looking out for as we head to the Thanksgiving and Christmas season. Now over, I think the first stock we have to talk about, because that is really the talk of the world, is really NVIDIA's blowout earnings overnight.
Yeah, so it was a cracking report. I think if we just take a big picture view and just think about the company, they are, I guess, the most leaned upon chip maker in the world. And of course, they're the leading provider of AI chips to the globe. And we know that they're partnering with, of course, the world's biggest suppliers and the world's biggest cloud companies that don't really need an introduction, Oracle and Microsoft, etc., just to name a few. But if we just dive into their details, we did have some cracking numbers overnight. So their biggest revenue stream, data centers, that's synonymous with chips. That segment of their business saw exceptional revenue growth that's not seen or has been seen anywhere on Wall Street for some time. So data center revenue growth, Brian, was up almost 300%, so 279%. But a lot of people are asking me today, yeah, it is incredible, right? A lot of people were asking me today, well, it's still too expensive. It's still too expensive for me. I think I've missed the boat. The reality is that's actually incorrect. I personally do think it is still a compelling opportunity, and you need to be looking for down days as opportunities to buy. Why am I saying that? Well, think about their forward growth trajectory. So 231% revenue growth is expected next year. Obviously, the basics say, earnings growth drives share price growth. And then you've got to think about these segments of the market that they're not yet in. So we know the majority of their revenue, Brian, is in data centers. But what happens when the 3% of their revenue line, automotive vehicles, what happens when we see driverless cars? Obviously, we know we did have that record producing revenue, but what happens when we do see driverless cars? 3% of their revenue is not going to come from automotives anymore. It could potentially be 10% in the future. So things like that we need to be considerate of. I also think about, remember last week, Brian, we saw that NVIDIA rolled out a brand new chip. It's called the H200. Doesn't mean much, but I guess for those people that are already using the H100, it's a significant boost to their efficiency. We know the H100, just a quick one, OpenAI actually used NVIDIA's H100, and that is the bare bones and the essential technology that is being used now to power chat GPT-4. So you really can't ignore NVIDIA. And we already know that Microsoft, Oracle, they're going to be the first ones to roll out this new GPU in the new year. So we know that's going to increase their revenue significantly because, of course, it's a lot more expensive than the one that's currently being used. And again, just closing off NVIDIA if we can, I really want people to pay attention to the fact that why this company will continue to rise over the long term is that it's one of the most held stocks on Wall Street, and it actually has an allocation that's about 5% of the top 5 world's most purchased and held ETFs in the world. So that is something to consider, and that's why it will continue to be purchased each quarter.
Now, Jess, on a different note then, one of the things we've talked about previously is around looking ahead to some interesting stocks that perhaps have underperformed. One of the things being consumer staples. Could you give us some insights and perhaps some of the stocks we could be watching out for?
Yeah, I'm so glad you brought this up because consumer staples, the whole sector in totality, I guess, is heavily undervalued. And what I mean by that is if we think about a company or a sector being undervalued, what we mean as analysts is it's undervalued based on their earnings that the company make. So we know that the staples sector is pretty much down across the world. It's almost down in correction territory. And then if you think about the earnings potential, the earnings that they're currently making in the staples sector, it's actually priced at one of the cheapest levels that it has been in the past 5 years. And we know with seasonality, we see staples companies do really well from an earnings perspective around this time of year. Obviously, the Western world is buying lots of chicken and turkey in particular in the US because of Thanksgiving. In Australia, we typically get a lot of turkey on our fork around Christmas, and then of course the US does, as well as Europe. So think about Tyson's Foods, which is listed in the US, and the little known the little known Aussie company called Ingham's. So both of these companies are actually tipped to see higher earnings and revenue for the periods ahead, indeed this quarter and next. But then think about their costs. Their costs are down. Why? The most biggest, I guess, 70%, I'll say that again correctly, 70% of the cost of growing a bird or a chicken or a turkey is wheat. And we know the wheat price is down heavily. So the wheat price is in a bear market. So of course, when the wheat price is down 30%, and we know earnings are likely to grow for some of these key staples companies, forward earnings are expected to grow over the coming years, it really it really leans into the fact that you can't ignore these type of companies.
On that note, Jess, thanks for your insights. Thank you for coming on the show.
Thanks so much, Brian.
Now, we've been speaking to Jessica Amir, market strategist at moomoo, and this has been BizTech's Asian Midday Market Watch. I'm Brian Fernandez. Check out the show on our website, www.biztech.asia, as well as our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.